that's not all about consumption. We'll talk a lot more about this as well. For that, we'll welcome the first guest on our big story today. That is Abneesh Roy, who's the Executive Director of Nuvama Institutional Equities, joins us for a quick, sense on what the sector is doing. Abneesh, let's start with crude oil. It is still at $104, yes, off highs. Do you think we made a moderate sort of range now and everyone will start to price themselves accordingly? We've heard of price hikes coming from Asian Paints. Earlier, we had other paint companies announce as well, maybe a 4 to 5% sort of price hike from across the board. That's a possibility?
Yeah, sure. Good morning and thanks. Yes, we expect that because most consumer companies have, say, 1 month to, say, 45 days inventory. Now the price hikes are happening and Asian Paint has announced 6 to 8% hike. This will kicking in April. So my sense is edible oil companies and paint companies have already announced, and rest of the FMCG, my sense is soaps, for example, or even hair oil companies, they use a lot of LLP. We will see in such cases clearly 3-4% hike. Rest of the FMCG, my senses will need 2 to 3% hike in Q1 if this situation continues, because around 20% of the raw material is linked to the packaging, which is linked to crude. Apart from that, detergent players will also need hike because that's again linked to crude oil. And even for liquor companies, glass cost is indirectly linked to crude. So all those things will need higher inflation. Broader FMCG, you're right, will need around 2 to 3% inflation in Q1.
All right. Meanwhile, there is news that has come in. Swiggy has hiked food delivery platform fee to about 17.6 rupees from sub 15 rupees, 14.99. Remember, Zomato too last week had affected this price hike in terms of platform. But the question here is, whether this is dynamic or whether this is static going forward. It is a lever to improve the food delivery performance. The fact that one player has done it would also mean that the others would do it, and that's exactly what has happened right now. Platform fee for the food delivery business has been hiked by Swiggy following what took place on Zomato last week. The other sector on our radar right now is the paint space, and Asian Paints is among the top nifty gainers today. The company yesterday sent out a letter to their dealers saying that there would be a price hike between 6 to 8% for most part of their portfolio and a little more for thinners, and this will be done in 2 phases, April 10th and April 21st, 2026. The companies tried to, mitigate the volume value risk and also smoothen it out via announcing it in 2 phases. Abneesh, your call on Asian Paints. You've initiated a trading buy on Asian Paints because of this.
Yeah, so that's purely because geopolitical can change very quickly. But 2-3 good things, Mangalam, is if you see last 4-5 years, we have seen that if volume growth of paint industry for, say, Asian and Berger is, say, X percentage, their value growth is generally X minus 5. Now what will happen, because these paint companies have taken broadly 7-8% hike by Asian Paint, and Berger will also take one more round of hike, that's my sense. We will see that in FY27, if volume growth is X percentage, and my sense is we can work with a 7 to 8% volume growth in FY27, the sales growth should be a bit higher than that. That helps in operating leverage. And even for the new players, if you see for the first time, they have seen this kind of volatility. So my sense is they will also take more price hikes, and there could be a bit more rational play given the kind of extreme situation we have seen. These are the 2-3 positive. Apart from that, Asian Paint took the price hike, I think, at the end. That shows the aggression. In the legacy player, Asian Paint has been slightly delayed. I think that's a demonstration of aggression, which I think is a positive for Asian Paint from a market share perspective.
But would these price hikes, Abneesh, suffice to overcome or offset any potential operational impact on the EBITDA or on the margins, considering the higher prices? If not in this quarter, because the impact has only been felt in the month of March, maybe in Q1 of FY27, does that have an impact on the margins, these higher prices, and if these prices remain higher for longer?
Sure, good question. My sense is they will need one more hike. How this works is initially when sharp inflation happens, consumer companies will lower the promotional intensity. So all those dealer extra margins which were being given because of the new player, I think that will reduce. Apart from that, this 6 to 8% hike has happened. If you see how the maths works, 40% of the raw material for paint company is linked to crude oil. And if that 40% say remains at a 50% higher, because $60 to say $90, if that remains, that's a scenario. I think that works out to 40 into 50. So around 20% hike in that kind of an extreme scenario. As I said, It will also include the dealer incentives and promotional intensity being reduced, which is generally not visible, but that's a dynamic number. Apart from this, clearly, the rest of the raw material is titanium dioxide and rest. I think that's very different supply demand situation. Apart from this, please note, consumer paints once in 5 years, and out of the total painting cost, only half is paint cost, half is manpower cost. So my sense is if consumer behavior is once in 5 years, I think this kind of a price hike will be absorbed, given the entire industry will take. But yes, one more round of hike will be needed if crude remains at $90-$95 for the longer term.
What is your call on Pidilite right now? Because, VAM prices are also somewhat linked to crude, and crude has seen a big spike. Pidilite, obviously, the management had guided for their margins to stay in the upper end of that 20 to 24% sort of range. They managed double-digit volume growth, but do you think there is a downside risk to the margins?
Yes, there can be slight downside risk because Pidilite is operating at the top end of the margins and they are beyond the top end. One difference between paint company and Pidilite is Pidilite generally likes to take a longer term call on the raw material pricing. So you will see one kind of a price hike by Pidilite generally in most years. Unlike that, paint companies can three, four hikes also if needed. So that's the behavior of the two industries. So I will expect that, of course, Pidilite has even higher pricing power than paint because they have a 70-75% market share. But they like to take a more delayed and nuanced call, given it's a single player, large player industry. So yes, I would expect some compression in margins if this continues, but they will aim for a close to double-digit volume growth and near the top end of the margins. Currently, they are even beyond the top end of the margin. So I think, yes, some compression can happen. I don't think that's a big concern.
All right, Abneesh, hang in there. You might want to stay on for the next conversation and listen into what the other Roy, Abhijit Roy of Berger, has to say about the current situation on crude consumption and color. If you have a question or two, we may patch you on to ask a question to Abhijit as well. With that, we take a short break. On the other side, we continue our big story. The management of Berger Paints joins us. Abhijit Roy. Welcome back. We are discussing our big story, crude consumption, color, and the second guest on our show now joins us, Berger Paints. Abhijit Roy is with us. We discuss, obviously, the current crude scenario, the demand sentiment, competitive scenario as well, all these and more, the impact of high input cost environment. Obviously, we were speaking with Abneesh Roy as well. So he's still with us, listening into this conversation, and if he has a question or two, so both the Roys on. I'm tempted to crack a pun here, but let's go to Abhijit first. Abhijit, how's the RM basket changed for you in the last month or so? How much of that has been passed on? How has trade reacted to it? And is there a likelihood of another price hike coming now that the price stays above that $103 per barrel?
So Mangalam, prices are fluctuating on a daily basis almost, because the oil prices keep fluctuating. Typically in the industry, if you look at it, the pass-through rate is about 30% for the paint industry. It will vary, depending on the type of products being sold by a company. But on an average, you can say is around 30%, which means that if there is a oil price increase of 40%, 30% of that, which is about 12%, will be the impact in terms of raw material price increase. So that's on an average how it will be. In our case also, it is more or less around those levels. So as of now, the prices have gone up to 110, then it slipped down to yesterday to 90s, mid 90s. Again, it is back to around 100. So the effective price increase so far, I would say, is around that 12-13% mark. What we have done is we have announced one price increase, which is effective tomorrow. The second one will come in effective the 30th, and then subsequently we will look at the prices, how it is operating, what is the situation, has the war cooled down or still on, and then take a call again in the month of April. Possibly we will take one more price increase after that. So typically in paint, we take in stages, that's how it has been always. And we are now going to take it. First stage will come in effect tomorrow itself. That will be part of the enamels and certain other portfolio in the waterproof range. And in the second stage, and the 30th is, all the premium and luxury emulsions where we will take up the prices. This will cover part of the price increase that has happened. Fortunately, we had built up a lot of stock because our April is big. So typically we have some stock with us, the finished goods and raw materials. So that will last for us some time. So in terms of impact on the bottom line, we will not have any adverse impact, possibly a little positive in that way.
Right. So if you could, notify the quantum of price hikes that you've taken, Abhijit. One is effective tomorrow. Another is effective in the middle of April. What is the quantum of this price hike? And the third one, if you're looking at?
So tomorrow is around 1.5%. The one which is on the 30th of April will be another 2% possibly. So it will be 3.5% of coverage. And then on the April, possibly around the 9th or the 10th, we will have the balance about 3 to 5%, depending on where the things stand at that point of time.
Abhijit, has there been any pushback from dealers with regards to the price hike? Has there been any demand impact now that you have informed them that there will be price hikes, and which of course they take effect, one tomorrow and other two at the end of the month? Has there been any thing that you have been hearing on the ground from your dealers?
So there's, typically when the price hikes are announced, the dealer tends to stock up. Specifically, the material which sells well, so they know that if it is stocked up, they will be able to liquidate that. So we saw increase in demand for some of these products which we have, announced price increase for. So that stocking up is happening, and we are already on a very healthy wicket as far as those products are concerned, where we are going to take a price increase tomorrow. So that's what has been the impact. So the reception has been good. Over the years, the paint industry, had inflationary trends, and whenever this inflation happens, people do tend to stock up material of those brands which sell well, and so therefore there is an advantage to that extent. Also, the fact that some of the smaller players tend to get affected much more. So some of that will shift possibly to the organized players once again, as it had happened in the case of COVID. So some impact, positive impact might happen there.
And what about volumes then, Abhijit? You had mentioned previously that you will get to double digits. Do you stick to that at the end of the year? And what about margins this time around, and more so in the first quarter, because that will be the full impact that you see, because this is just 1 month?
Yeah, so this month, I think we should be comfortable. We are looking at double-digit growth rate for this month, and that should happen both in volume and value terms. So that is most likely to happen this month on account of the price increases announced. There will be some positive movement there. And the margins, as I said, will be slightly positively impacted because we are carrying old stock, which are at old prices, and we are taking these two price increases, so it will have some positive impact there. So from that perspective, this month is fine. Next month, it will all depend on where the prices stand as far as raw material is concerned. The next quarter, I am saying. We will have to wait and watch and see. As I've already mentioned and always maintained that this is a responsible industry. We do take price increases as and when required and do pass it on. Yesterday, the leader announced the price increase effective 10th of April of about 6 to 8%, and then another one on 21st of April of another 6 to 8% for a different range of products, but the bulk of it will be taken on the 10th of April. Pidilite announced the price increases today. They haven't announced the quantum, but they announced that on 10th of April, they will take the price increase. So overall, if you look at it, the industry will tend to pass on the price increases. So that's not
That's
a very
understandable.
worrying thing.
That's totally understandable. And one would have imagined it to not happen given the current competitive scenario. We'll talk about that in just a bit, but we do have Abneesh with us as well. Abneesh, you've been listening into this conversation so far. Your views, and also if you have a question for Abhijit.
Yeah, I have a question for Abhijit. Hi, Abhijit. See, generally, Abhijit, we see that market leader takes the move first. This time we have seen you be among the first to take the hike. Then I have seen that Asian Paints hike is on the higher side versus your hike. So if you could comment, will this lead to some market share erosion in the near term to the market leader, given they have taken the hike a bit later? And second is, the new players have not seen this kind of volatility ever, because last 2 years we haven't seen this volatility. You and market leader have seen this multiple times. Would you expect that competitive intensity from the new player can potentially reduce? You have discussed the local players, but on the new player, would you expect that to happen?
Right. No, to answer the first question, we saw these price increases happening, and it was pretty substantial. For enamel, for example, the prices had gone up hugely, from 35, 40 rupees a liter. And it was obviously, even if it cooled down, because normally these oil prices fluctuate very wildly, and they do tend to come back again. So, if it moves up to 110 and then it drops down to 90, that is a possibility which is always there. But from 72 to 90, it's still a 30% jump. And that 30% of 30% means 9% impact will be there no matter what happens, even if after the cooling happens. So we took a call that, there's no point delaying on this, and therefore let's jump in and take those price increases of those products where we have a much stronger presence on the ground. And therefore the dealers will be forced to stock our material. The rest we did not, we delayed it, till the leader took it. So that's how it is.
All right, Abhijit, Abneesh, pleasure having you today.
Actually, he didn't answer on the competitive intensity. Abneesh
second
asked him
part
about
is
that.
on the
Yes, and I
competitive
wanted to
intensity.
add to what he said on the market share bit as well. Do you think you will continue to hold on? Or add?
As far as we are concerned, I think we will temporarily gain some market share. That is not something which is permanent in nature. But this month we will definitely have a little bit of an advantage. As far as the new entrant is concerned, Avnish is right that it's a difficult situation, because they haven't got used to it. But I presume that, being in the industry, they will have to, follow in the similar lines. But when they will take, what they will do, they haven't announced as yet. So possibly, there will be some announcement in a day or two.
But competitive intensity in general, has it been high for you or has it been low? Because, not only is Birla Opus there and it's increased its presence in the east via the plant, you have murmurs of stronger positioning coming in from JSW Axo Combine as well. So how's that played along, and with the aggression that Asian Paints has shown?
No, so, it has remained more or less static, for the last few months. I would say there has been no significant increase or decrease in the intensity of competition. More or less, it remains where it was, say 5 months back. So no major changes has been observed so far. Yes, so Birla has gained market share, over the period, but over the last 3-4 months, more or less, the figures are hovering around the same levels for them. It's not jumping up anymore, which I have mentioned in my earlier, interview as well. So it's static in terms of growth rate. It is not accelerating anymore. So the competition intensity remains at earlier levels. Nothing, which is worrying as such.
Right then, now we'll take your leave, Abneesh and Abhijit. Thank you so much for sparing time and joining us and take us through the industry trends as well. Paint companies announcing price hikes. Take a short break. On the other side, continue our conversation on the markets with Somnath Mukherjee from Ask Private Wealth. Stay tuned.